an understanding that the global economy is fragile. Robert Shiller of Yale University, he makes his annual visit to Davos, and he is in search of the good society. Of course, his prolific writing. Wonderful to have you here. I want to get to housing here in a minute. I know you've been thinking a lot about that recently, but on Davos, finally, the financial system is better.
A little better, yeah. We still have risks going forward. I guess people look at interest rates, you know.
You look at the spread market. Yeah. The spread market is better. Can you confidently bring that improved spread market over to an improved real economy, whether in Europe or in the United States?
Yeah, you're talking to the wrong man for that. I wrote a book, Animal Spirits.
Yeah.
What is it that drives it? George Akerlof and I thought it's mostly psychology or attitudes or stories that drive the economy. This whole European crisis that we're going through was started by a story of Greece. It was a great story. Those Greeks, you know,
but
they
we've
caused
lost
the whole
confidence.
thing.
But we see a better stock market in the United States. We see the VIX, where it is even the housing market providing stability. That speaks to that greater confidence. Can you assume a business animal spirit in the next 12 months?
Well, the other thing, fundamental principle of economics is mean reversion, and you don't stay in depressions for too long.
Noah Robini thinks so.
I was going to do Reinhardt and Rogoff, who claim that when you have a financial crisis, you go through 10 years of a weak economy. And that bothers me. You know, that's an authoritative study. They studied 800 years of financial history. It bothers me. So I still keep that in my mind. We've been 5 years in a slow economy. And it could go quite a bit longer.
James Dimon was here talking 3–4% GDP. Do you not agree with Jamie Dimon of J.P. Morgan that we can get back to the old economy we knew?
Well, we could. Anything can happen. But we've seen GDP growth at, you know, subnormal levels and at a lower level. It has to be supernormal to get us back.
Okay, supernormal housing market. You have been cautious with Carl Case on a housing recovery. Can you become more optimistic when you see the data next Tuesday?
Well, we haven't seen the data next. The S&P.
I'm trying to make some news here. Help me out.
Well, you're talking to someone whose inclination is to be a long-run historian. I think that the housing market has been declining for something like 6 years now, and that could go on. That's my worry. The short-term indicators are up now. It definitely looks better. But we saw that in 2009. Maybe now people will say 2009 was different because it was the home buyer tax credit that dominated. Right. But you know, you never know. There could be something else temporarily dominating right now.
Bob, the key question for me right now is economists love to aggregate the housing market together. I see it as a distressed housing economy of foreclosures and separately a good housing market. Can't we get a great year in a good housing market where we don't see 2 or 3% year-over-year returns, but 12 months from now we're looking at 4 or 5 or 6% in that normal housing market?
But I mean, it's a good housing market in the sense that mortgage rates are very low and prices have come down to normal levels. So yeah, it's a good time to buy if nothing bad happens. But it's also a very bad housing market in that most of the mortgages are being supported by the government. And we have the Fed in this buying program. It's a very abnormal market. And I think there's a lot of uncertainty going forward. And Congress, who knows what they will do.
Your iconic phrase, irrational exuberance, quickly here, when we look at the better tone in Davos, are we anywhere near ever getting back to an irrational exuberance?
Oh, I think we're pretty far from irrational exuberance, maybe 50 years away.
55-0. Well, that's newsmaking. Bob Shiller, thank you. Maybe. Bob Shiller of Yale University. That was a break exclusive. 50 years from now, Sarah Eisen will still be doing Bloomberg surveillance.
Oh, wow. Thank you for that break exclusive. Tom Keene, the conversation there with Robert Shiller, who, by the way, is still reluctant to call an all-out housing recovery. We're back here on the